Shares in UK publicly listed supermarket chain Morrisons surged by almost a third in morning trading today, after Britain's fourth biggest grocer rebuffed a $7.6 billion takeover from US private equity giant Clayton, Dubilier & Rice. The huge spike in its valuation was prompted by emerging news over the weekend that Morrisons had become a takeover target for CD&R, potentially sparking a bidding war for the grocer. The news prompted shares to rise across the grocery sector, as investors bet that other supermarket groups could become targets for private equity investors or that a bidding battle could erupt, with online giant Amazon AMZN, which has an online delivery deal with Morrisons, one possible bidder for its partner. American private equity firms Lone Star and Apollo Global Management APO have also been mentioned as possible suitors for Morrisons, which has been battling with a declining market share, now down at 10%, from 10.6% 5 years ago. There is a sense that the UK supermarket sector could be ripe for more potential takeovers. The share price performance of the entire sector is seen as underperforming compared with US grocers, for example, despite being profitable and achieving typical dividend yields of around 4%. CD&R has history, having previously made investments in the discount UK store chain B&M, from which it made more than $1.4 billion. Morrisons first announced on Saturday that it had turned down a preliminary bid by Clayton, Dubilier & Rice, which is believed to have been made on or around the 14th of June. The Bradford-based company said that its board had unanimously concluded that the conditional proposal significantly undervalued Morrisons and its future prospects. CD&R had offered to pay nearly 320 CA share in cash, while Morrisons' share price closed at 247 C on Friday, before it surged today as trading reopened for the first time since the announcement. The New York-headquartered private equity firm has until the 17th of July to make a firm offer and to persuade a reluctant Morrisons management team to recommend that shareholders agree to the deal. Sir Terry Leahy, a former Tesco chief executive, is a senior advisor for CD&R and, like its market-leading rival Tesco, Morrisons shares have been trading below their pre-pandemic levels as higher costs due to operating throughout the pandemic have taken their toll despite booming sales at essential stores across the UK. Morrisons currently employs 121,000 people and made a pre-pandemic profit of $565.5 million in 2019, which plunged to $278.6 million in 2020. It owns the freehold for 85% of its 497 stores. 1/4 of what it sells comes from its own supply chain of fresh food manufacturers, bakeries and farms. CD&R has so far declined to comment on whether it will return with a higher bid, but analysts believe its approach is probably just the first salvo. Previously, former Walmart WMT-owned Asda was snapped up by the UK.